Happy Wednesday, peeps. Let's jump into ROUNDHILL, the weekly payers. So I saw somebody in some comments talk about, oh, wow, there's a massive distribution yield. And somebody said, yeah, well, volatility creates payments, and that's larger payments. And that's typically true, assuming you're using the right methodology on your option rights, which on these weeklies, they're daily. So they don't vary a whole lot. It's not like they're doing spreads and all kinds of fancy things. They're doing more simplistic options or just doing them daily. So, having said that, um, let's take a look at how everything's done. As a reminder, what I'll do is I'll go through XDTE, QDTE, the S&P and the NASDAQ, and then the Russell RDTE. And I want to highlight this time a little bit, and I do it occasionally, what the weekly changes are. A lot of you know when it just got hammered. So these have come back in. Remember, payments aren't everything. I mean, if you're going to get paid for 20 years, then I suspect things will even out. Not so much from the payment spread, but from the actual underlying. So that has a lot to do with everything. I try and caution when you're getting paid a lot and your underlying index that they're writing on is just soaring, consider that like a great Christmas present or a lottery ticket that you hit, because it's not always the case, right? The S&P might average 9.9 over a decade, but when you look at those 9.9 collective 10 years, they had some boom and bust within that period of time. So just always understand that, it's sort of the revert to the mean. And I always say things like, you want to go where the puck is moving to. You want to skate to where the puck is going, not where the puck's at right at the moment when you look up. So that's just so true. Revert to the mean. Like if something's paying you 18% and the index is up 30% this year, and you start to project out the next 15 years like that, that's not reasonable. Things don't happen like that. All right, having said that, let's jump in here. 34, 29, 29. So it had a massive yield, but look at this. Look how far this has dropped. Our weekly low out of all these distributions is 40, and our weekly high, we had a 53.62 a while back. So you can see that when you're up at 53 and this thing launched, and it was much lower at launch, then you're really killing it and you're getting good income. Well, now you're just barely eking out. Now, again, that's assuming that you've been in it for the long run. If you just bought in 3 or 4 months ago to ROUNDHILL and you're behind the 8 ball, you're getting paid, but you've probably dropped a lot. Now, I know some of you will tell me, oh, Bruce, I trade in and out. Well, isn't that kind of hard to do when you need the income from it? So, I mean, I love, short time trading. I get it, swing trading, but when you just need income, that's harder to do, right? You may have some shares that you're doing that on, but you probably don't want to do it on the ones you're depending on just getting paid on. All right, there are other ways. There are calls and puts that you can execute to try and lower your overall cost. But having said that, remind me at the end to go point out this. So, but that'll pop up in my summary on where we are over the last period of time with these guys. So you can see that that yield, I don't have another yield unless I go back into December when they were paying a bunch of times where there's a yield that high. There's a 43 yield back in August, right? And that's also on 49.76. We're at $40, right? So you can see that it's 41 cents and we're 34 cents. It's a big yield, and that's true, but you can really get caught up. I mean, Ulti's a perfect example. There's so many, Ulti's okay. It's not the greatest yield max fund, but people swear that, oh, 80, 90% yield. But go look at a chart on that thing over the last year. It's dropped like 70%. So, okay, maybe you're getting an 85% yield. Then don't think it's the greatest thing since sliced bread, but just say, hey, I can go out and buy an oil stock and get a 15% annualized yield on it. I can get more than that in Petrobras in general, not in Brazil. But I'm just saying to you, you can't look at one side. You guys know that you always have to look at total return. We'll get to that in a minute. Let's go look at the QDTE or our NASDAQ. You got a lot of weekly payments in here, right? So we had a high of 45.75, and here we are at 30.42. So we've had a $15 drop. Okay. This guy up here had a 1362 from low to high. But here's the total. So we've got a $12 drop, but we had a $14 distribution payment. So there's your classic. Here's your NAV loss, 12 points. This is all assuming you bought it in inception, but you've gotten 1439. So you're $2.36 ahead on a 40 something dollar investment, right? It's not a big return. We're done about 2 or 3% return over a year. You're better off in T-bills. Again, I'm looking at it in a window, right? From X to Y. So, but it's a pretty long period of time, and that's what markets do. Okay, so here's QDTE, 41% yield. Nice, right? I don't have any problem with the yield. Paid 23 cents. But I'd much rather go in here and highlight some 33-cent payments, right? I like big payments because this is on 39.29, granted, right? There's a 40, and now we have our 41. So that's what I like to do is go through and look. And some of these in December don't really count because they were paying out excess amount. All right, guys. But look here at the bottom. Here's our scenario. So we got 1678 in the last 13 months, right? We're into April. So it started on 325, but we've dropped 15.2. So you still are ahead, but barely, right? It's my ulti example, or lots of other things. RDTE, which was really, they came much later, right? These guys launched in like September. The other two, the S&P 500 and the Nasdaq 100 under Roundhill, they launched in March 7th. So you had about a 6-month lag here. So these guys have now got 3 months for, they're a good 6, 7 months in. The other guys are 13 months in. But look at this. This is now in a negative. So that's what I mean, people, when you take a look at this. Now, I know people sometimes like to look at my charts. At least people are the ones that ask. I at least update it through March. One more weekly payment in April, and we'll have a 5-week payer. So it should be pretty good. But look at this. It wasn't the lowest. This is, 92 cents. We've had lower. Um, that's on the S&P. This is on the NASDAQ one, right? This is our lowest 4-week payment on the NASDAQ, right? The XDTE Roundhill. Collective amount of money received. All right. I didn't do the chart, which I should, but here's our 6 months of payments. We got $1.50 when we started in October with the 5 weeks color coded. Green is 5 and orange yellow is 4. So we had $1.33 in November over 4 weeks. In December, now in their December, they didn't get all the payouts because they just started, like XDTE and QDTE. But look at this. In January, we jumped up and we set a new high for 5 weeks. We got $1.58 versus $1.53. And this should be a brown payment since it's a 4-week payer. And that's up to date through March's payments. April's the one that'll have 5. All right, 93, 97. So it's not the worst month. All right, guys, let's go here. I think you care about this. So here's looking since launch, since inception. These are their prices that they on the opening day, the close: 52, 46, 46, 44, and 42. This guy, at one point, 3 months in, 3 months in, it was trading at 51. It was paying out the most amount of distributions. And I mean, you could project this thing out. But look at this guy now. I copied this earlier. I don't know why it keeps not reverting back. There we go. Okay. So here's your total dividend paid since 3/7/2024, $14.40. All right. Um, and this is over 412 days, but I went down and annualized it. And I said, okay, the dividend return. Let's take a look at the dividend return. The S&P doesn't pay the amount of return that the NASDAQ 100, 27%. Right? But look at the gain loss, 21%. So you got a 328 gain. That's not, I mean, you'd better in treasuries. I'm not saying do that, but when people think this thing is the greatest thing since sliced bread, you got to be in the right sector. You got to watch what you're doing. You got to be involved in it, right? These were great 4 months ago, but they don't look so great over the last year. Now, I know some of you are going to say, yeah, but Bruce, I buy it on the low day. Well, I don't think we've seen the low in most of these indexes for the year. I still think it goes lower. I'm hoping this bounce takes us back up higher, but I do think we're going to see lower lows for the year. Look at this Russell that I brought up. This one's got 9, 10, so it's got 7 months. These are well past a year. But I did take these and annualize them, right? But they're not going to vary radically if you take the true, 412 days into the 365. So kind of interesting. The S&P is still the best because it drops the least right here. I mean, so 903, that's the problem. But it's losing $11 right there. So they're just not enough to offset that. When you start losing, that is a loss. Guys say to me, oh, I got income. Well, did you? Did they just give you back some of your money? Okay, guys, that's what I got for you. Um, if you haven't looked on the channel, I'm still going to give you the round hills and the yield maxes and defiance and some comparisons because I know that's what I started my channel and I know a lot of you are there. I own very little. I own some Pulte. Um, I own a little bit of Tesla, and I own a little bit of GDX that I've had ever since the beginning, which aren't the best ways to play any of those, to pay Palantir or to play GDX. But hey, I bought them. I'm reporting on the area, so I just keep some. So it's, I can at least, record the data for myself as well. All right, but if you look at my channel, I've owned 70% of my wealth in physical metal um, for over 15 years. It allows me to sleep well at night. Even when I was going out and putting hundreds of thousands in Coney and Misty in the heyday. Now, I still think that BTC has a chance to do what gold is doing and have its run. I don't believe that we're going to run that high in the next 6 months at all in the NASDAQ, the S&P, and the Russell. I mean, I do think by 2032, for example, which is out there, 7 years, you could have a 30% gain from here to there. That's not much, though, guys. Distributed over 7 years, you're probably averaging 3 or 4. But if you want to have 30%, 20 to 30% a year, you need to be in commodities, and then within commodities, you need to be in precious metals. So go out and look at some of my videos. I built a database of over 720 mining companies, precious metals, from the smallest to the largest, to royalty, to streamers, to, explorers, to producers. And I'm going to start reporting on that database. I came out with the top five. Within a day of reporting on my top five mining stocks for 2025, they dipped down. I did it on the weekend. That Monday, they dipped down. You were able to buy more of them if you didn't want, right at a price I told you. Everything from then is up over 30%. So, that's where you want to be. When you're up in a week 30%, 2 weeks, you're still up 30%. That's where you want to be. And people say, well, I need income. Well, then sell a portion of what you bought. And some of them pay one or two of these, they don't pay hugely, but they pay this level. They pay 1.46%, right? On top of all the gains. All right, guys, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Have a great rest of the week. I'll be back with some Yield Max later. Bye for now.